Hello guys, welcome back to the channel. A new monthly contract has just been opened in the currency market. In our last two videos, I explained how the currency calendar and time cycle work and how we use it to make the best trades that are perfectly in line with the institutional positions. In this video, I will be analyzing the live market with you to determine the major moves that will happen in this monthly contract. You should know that the monthly contract is now in its evaluation phase. If you have seen our Forex calendar and time cycle video, if you haven't seen that video, you need to watch it so that you understand the analysis perfectly. So without wasting any of your time, let's get on the chart. This is the Euro USD chart with all the major and minor EBITDA prices marked. The best trades are those trades that are taken from the minor EBITDA fences. That is why I have my EBITDA fences highlighted for easy visualization. Also, as you can see, all the heavy orders opened by the institutional traders in the previous contract have all been marked up till yesterday. So the first thing to mark right now is the monthly and quarterly contract open and the reevaluation points. So without wasting time, let's go ahead and do that. The current monthly contract that has just been opened is the December contract, and it was opened using the Monday-Tuesday contract that just ended. That is the 18th and 19th of November. So we go ahead and mark that. So we have the open of the monthly contract marked. So we need to go to the open of the previous one and mark that also. That will be the November contract opened in October. And that contract was opened using the Monday-Tuesday contract, which is 14th of October and 15th of October. As you can see, it's already marked. So there is no need for us to mark that. What is left now is for us to mark the midpoint of that contract. Now we need to mark the next monthly contract, which is the December contract, so we know the end of this new monthly contract that has just been opened, and then we mark the midpoint of this new monthly contract also. So we go straight to December. Let me change the time frame to 4 hours so we can easily see into the future. So right here is where December is, as you can see at the base of the charts. So the Monday-Tuesday that will be used to open that monthly contract is the 16th and 17th of December. So we mark that. So that is the December contract marked. And as you already know, that December contract is also a quarterly contract. So we'll make that level a quarterly line so that we know it is a quarterly contract. And like you already know, as we have this midpoint for the monthly, we also need to mark up the midpoint for the quarterly so that we know where the quarterly swing is happening. So let me just go ahead and mark that. We start from the open of this quarter to the open of the next quarter, and as you can see, that lines up perfectly with the midpoint of the second monthly contract in that quarterly contract period. This is not always the case, but most times it aligns with the midpoint of the second monthly contract. So what we'll just do now is to change the color of this to red so that we know it is representing the quarterly midpoint and also the monthly midpoint. So with that marked up, let's go back to our current monthly contract and mark the midpoint. So now we have the midpoint of our monthly contract, and as you already know, that is where the reevaluation phase is going to start. So let's go back to the 1 hour time frame. We are back on the 1 hour time frame. This new monthly contract that is open, the fundamental direction is bearish, so I like to mark that also on my chart. How we know the fundamental direction is bearish is based on the fundamental data that came out in the previous month. The next thing to mark is the target for the fundamental move. We know the fundamental move is bearish. We need to mark up the target, which is definitely the low of the previous monthly contract. And as you can see, the previous monthly contract is this one right here, and the low is right at this point. So that's going to be the fundamental target for the monthly contract. And when the fundamental target is reached, that is when we have our first reevaluation of the order book to see where there are pending orders that need to be opened. And as you can already see, the institutional traders are already buying heavily in the open of the contract. Even though the fundamental bias is bearish, they are already putting in heavy buys, which means when this fundamental target is reached, we should expect price to reverse and go back to activate all these pending orders from the previous reevaluation phase. So that is what we expect to happen. So let's go ahead and mark the target. Now we have our monthly target marked. So what I'm expecting now is for price to drop and reach this monthly target. In our Telegram group, I was able to predict this move up, which is a retracement move, and also this continuation move down. As you can see from the screenshot, I told our members that yes, on Monday, Tuesday, we'll expect a retracement back up, and on Wednesday, we will see a sell-off to run the monthly target. And that is what is playing out right now. This has nothing to do with price action or break of structure or what have you. It is basically understanding the time cycle of currencies and also understanding how the institutional orders work. Basically just understanding the market from the institutional perspective. So what we expect the market to do right now is to continue the bearish push and reach for the monthly contract target. After running that monthly target, we will expect it to reverse and we will see the institutional buy orders coming in, so that we'll be certain that yes, the market is going to reverse. So when the market reverses, it will head straight for all these pending orders from the previous trading period. It is not certain that it is going to get to these ones that are far away, but at least we are very sure it will get to this one right here and push into this either fence right here. So that is what I'm expecting. What will happen at this point, we will know based on the heavy orders that come into the market. If the institutions continue putting in buy orders, that means they expect price to continue pushing up, which may most likely push price to hit targets that are far away. But if we see heavy sell orders come in, that means we get retracement back down and into the reevaluation phase, where we will now reanalyze the market and check the order book to know the next point the price will head to. So that is what we are expecting from this market, and that's exactly how we expect it to play out. But we are not the market maker or the institutions. We have to still watch the orders that come into the market and use that order to know if this plan is what the institution is going with. If they are going to change their plan, we will definitely see it in the heavy orders that come into the market. If at the point of hitting the monthly target, the institutions decide to put in heavy sell order on that day, that means they are not expecting a reversal. That means they want to continue pushing price more to the downside. So this scenario will not play out. But if at the point of running the monthly target, the institutions start opening buy positions, or they don't open any sell to show us continuation, that means we should expect a reversal. And that is my analysis for Euro USD. As for the other major currencies, you know they are followers. They follow what Euro USD will do. It means by the time Euro USD is running this low, you will have some other major currencies that will be running the low also, and you have some that will give divergence that will be inside the range. And at that point, when Euro USD start turning, they will also start turning and then follow it to the upside. And if Euro USD decide to continue to the downside, those other currencies will continue pushing to the downside also. So that is it for this video. I'll see you guys on the next one. Have a good day and enjoy your trading.